Welcome to the Retirement Lifestyle Show. I'm your co-host, Roshan Loungani, here with Adrian Nicholson. Adrian, how's your week been?
So far, so good. Happy to be here on the Retirement Lifestyle Show. Looking forward to our podcast today.
Yeah, we have an interesting topic today. Just with the election coming up, I've been getting questions saying, should I adjust my portfolio in light of the election, or if I think this person is going to win or that person is going to win, whether it's Harris or Trump, what should I do? And so we're going to talk about that today, but I'm going to start out with a couple things I found that might make you want to turn off the episode. But hopefully you stay with us. But the first is that it said that I saw in one of the articles I was looking into that it just says the president often has less of a direct impact on the economy than the public believes because there's so much that goes into implementing policies. They might not be able to get their policies through the nature of the economy and the stock market, which relies on growth of multinational corporations. There are just so many inputs that the change in presidency won't necessarily impact that. Another area they actually illustrated this just when they were comparing the Trump administration and the Biden administration and what happened with U.S. Energy and clean energy, because in general, you would have thought that the Biden administration was better for clean energy, and Trump's administration better for more fossil fuels, more the energy index. Well, under Trump, the energy index was down 40%, while the S&P 500 Global Clean Energy Index was up 275%. Under Biden, the S&P 500 Energy Index nearly doubled, while the S&P Global Clean Energy Index was down 50%. So you would think the opposite would be the case. Now, as I was reading that stat, I did uh, think just a little bit of healthy challenging the data that if the clean energy index just was up 275%, it's not that much of a shock if it would then be down, something after that much growth, with that 50% decline. And then, the negative 40% on the energy index with Trump. Yeah. Part of that is his administration ended with a lockdown in COVID where people couldn't go anywhere. So energy prices went down. So all that being said, have a healthy skepticism with anything that we look at or discuss with this, and just know that Buffett's got a quote regarding the Fed. I imagine it would hold true with elections, but he had said once if he knew what the Fed was going to do about interest rates, he wouldn't change a thing with what he did investment wise. I I I haven't heard him say anything about the presidency, but I imagine it would be the same thing. If he knew who was going to win, he wouldn't change what he would do. So I'll give you what the talking points are, what the thoughts are, and some potential opportunities. But at the same time, if you listen to this and say, well, I don't think I'll do anything differently, I don't think that's a bad decision either. Adrian,
Yeah, I
anything
definitely like a
at the
lot of
top?
I definitely like a lot of the points in the data that you brought up as well. And when it really comes to elections and just viewing it from a market or economy standpoint, I think the biggest thing is that we all know that the economy, especially in the markets, hate uncertainty. And elections
Mhm.
definitely bring a lot of uncertainty because it's really hard to determine who's going to win. It's really going to be hard to determine if somebody does win, are they really going to follow up on a lot of things that they promised? But that uncertainty creates volatility, which creates a lot of emotion and fears in the market. So it's very understandable why you're having these conversations or why people are thinking, do I need to make a change or not as well? Because I don't want to completely dismiss the fact that a presidential election will have no impact on the market and the economy, because it definitely does. Because like you mentioned, a lot of sectors and a lot of industries really rely on the certain policies that get put in place by the people that are in office, but sometimes it goes against conventional wisdom, as you expected, where if one party gets into office, you think this industry doesn't do well, but maybe it has a year where it outperforms. So trying to predict it is really, I guess what you're saying, Roshan, it's really hard to do, and don't let that really override your whole investment decision. But that is something too that you have to look at as well. Let's just say you are heavily concentrated in a certain sector or industry. You definitely have to be mindful of an election coming up too, because that can cause a lot of volatility in your portfolio if you're not properly diversified or ready for it.
And when you mentioned about just being properly diversified, that is what one of the tips were, as far as this election and really any presidential election, was just that being diversified. And interestingly, one of the stats I saw is that the S&P 500 itself actually has very limited sensitivity to election results. And the reason I think that's the case is, the S&P 500 that's the 500 biggest companies in the United States, and you might see money move from one area to the other with certain policies, and so there may be a rotation of where money has gone, but usually wherever it's going is and wherever it's coming from are both represented in the S&P 500.
Mm-hmm. Yeah, exactly. And then, I mean, that's just also just thinking very domestically. But as we know right now with our markets and economy, it is on a global scale as well. So although we are having a US election, that does have an impact. But again, with how our economy and how our markets are, it really definitely is something that will have an impact, but not to a significant degree, depending on just looking at it from a global perspective as well. Because if you think about it too, one thing that is on top of mind as well is trade, tariffs. Both candidates have very different views on that. And depending on if your company is more focused domestically and does everything in the United States, or you're a company that does a lot of business overseas, that's something too that you have to look at on an individual perspective when it comes to your portfolio.
Yes. So, and that was one of the areas, just going over some of their potential policy proposals. Trade, as you mentioned, is one of them, and Harris's stance is that to maintain the status quo, being tough on China and having some targeted tariffs on steel and aluminum. Trump's stance is to have a baseline tariff of 10% on all U.S. imports and a 60% tariff on U.S. imports from China. So you mentioned a lot of talk about tariffs, and what the bond markets are currently saying is that if Trump wins, those tariffs will be inflationary. So the bond yields have actually gone up, and as belief has been there that Trump's likely to win the election right now. At least that's what the bond markets are saying, and the yields are up because the expectation is that if the tariff policies go through, that'll be inflationary. So the Fed's not able to cut rates as quickly as the markets anticipated before. So if you've noticed some of your bonds, the price has gone down in the last couple weeks, which is the opposite of what many people were expecting when we had a Fed rate cut. And the reason for that is the way that the bond market is predicting the election at the moment.
Yeah, I mean, that's a really good point as well. And I know this podcast today is really centered around the election, and we're kind of going into the interest rate camp as well. But I think that's just really important as well, where, the expectation is that inflation is at a good level right now, but people are still very concerned about inflation as well. Is it going to creep back up? Are expenses still going to increase? What are going to be the rates on loan? That still is very prevalent and very powerful for voters right now, because again, that's something that people really had a negative impact on not too recently. So depending on what the Fed does with interest rates too is still going to be something that drives the market just as much as the election will.
Yeah, interest rates definitely will. And actually, as you talk about that, another uh, policy proposal here to compare is with monetary policy. Harris plans on a hands-off approach with the Reserve, where Trump wants to get more involved with the Federal Reserve, which is supposed to be a non-political body, right? So that would just be really interesting to see what would happen there, and how the bond market prediction of rates. Well, what would something like that do if Trump wins? What does involvement in the Reserve mean? So that it hasn't been done. So that's another policy issue that you just mentioned. Taxes, I'll go into that next. The Harris camp they're saying their plan is to extend the Tax Cut and Jobs Act, the rates that are set to expire at the end of 2025 for all households making under 400,000. So everyone above 400,000, the rate would go back up to 39.6, the top rate at least, and there'd be rate hikes for corporations, a restoration of the child tax credit as well, and new housing incentives. On the Trump side, he wants to make the expiring rates permanent, lower the corporate tax rate, and consider replacing personal income taxes with increased tariffs. So when I look at these two policies, quite frankly, I also question what's possible. Adrian, as you had said so wisely earlier, what can they get through, and what can they have passed? What policies do they almost change their view on? I really wonder if either of them could pass what they're proposing in the tax area.
Yeah, and that definitely will have a significant impact, especially when it comes to corporations, earnings, their balance sheet, what happens to that corporate tax rate as well, and how that would impact not only companies, but ultimately the consumers as well. That's something to think about. And regulation, too, is just going to be huge. And again, this is going to be different for certain types of businesses, whether they're small or large, depending on what industry they're in, is also something that's crucial and can definitely impact certain companies because, again, Kamala and Donald have very different standpoints on tight regulation versus loose regulations, what certain sectors need to be more regulated or not regulated. And that's something that can really help or hurt growth, and something, too, that is going to be interesting to see how that plays out.
Yeah, as you're talking regulation, I'll go into the next category, which is their stances on energy. Whereas Harris is talking about continuing to invest in clean energy, reducing emissions, increasing efficiency, and raising taxes on the fossil fuel industry. Whereas Trump is focused on increased energy independence, greater domestic production of oil and gas, and rolling back environmental regulations and incentives. So, as you mentioned, lowering some regulations and incentives on one side versus potentially raising taxes on the other side.
Yeah, and another one too. It's maybe you have more data or more stats on that, but one thing too that's on top of mind when it comes to investors, when it comes to regulation, is the crypto industry as well. That's also looking as well to the election as well, because that's going to be a very big standpoint. Is it going to be heavily regulated or not? Is the person that's coming in the office going to be pro cryptocurrency or not against it too? So that's I know crypto is kind of part of the market and correlated, but it's also a separate thing. But that's also something too, as an investor that's in an industry, or if you're invested in cryptocurrency, you have to be aware of as well.
Yeah, there was actually an article recently in Barron's that was saying the markets don't care who wins, but the crypto world does, and they want Trump to win. Trump has been very much pro crypto, and he has. I haven't seen too much on what he said about the regulatory side of things with crypto. I imagine he wouldn't want to be adding regulation in that space, but he has been talking about the ability to continue mining, and which would just be more growth in that space.
hmm Yeah,
The next
exactly. And you got to
policy,
imagine there might be volatility with that.
Yeah, for sure, and there has been. You do see, based on what the polls are saying, movements up and down, particularly in crypto. Um, Next, defense. Harris, an emphasis on alliances and multilateralism. Trump pushed for more self-reliance from NATO, increased pressure on allies to bolster defense spending. And just yeah, and you mentioned this earlier, Adrian. Regulation. I actually wanted to go over that as well. Where with Harris continued antitrust enforcement, as has been the case under the Biden administration, a focus on monopolies and continued support for traditional energy and bank regulation. Whereas on Trump's side, less focus on energy and bank regulation, potentially being more accommodative to tech M&A, although he is supporting regulation for big tech. So I think we will still see a lot of that. Now, um, as I mentioned, there's another area, actually, just going a little bit deeper in the taxes, that I think is worth discussing, uh, particularly capital gains rates, because I've heard a lot of talk about that. And Adrian, I'm sure you and I have discussed it as well, uh, with the potential taxes on unrealized capital gains. And this is one of those things where I don't know that it would go through, but let me just go through the stances. Trump would not want to have any adjustments to capital gains. It would be the same as he had passed during the Tax Cut and Jobs Act. With Harris, she supports an increase to capital gains rates, and there's been a lot of talk and press around, is there going to be capital gains tax on unrealized capital gains? And right now, the talk has been that it would only be on the centimillionaires, so people with $100 million and more, if that were to happen. I'm a little skeptical that can actually go through. The people that are really concerned about this, though, um, what they're really citing is that it's a slippery slope. If it's able to get passed for people that have over $100 million, it's only going to be time where a matter of time until it gets gradually comes down to everybody. So that's something that's talked a lot about. I recently saw something where they said, "Oh, that's no longer something that she supports." I don't exactly know, because I haven't seen anything from her directly as far as her stance on it. But once again, as I said, I'm skeptical on that one, even though there's been a lot of talk and publicity around that potential stance.
Yeah, I mean that's definitely a really hot topic when we talk about taxing unrealized gains, like a territory that we've never been or never seen. But I guess that shows you, I guess, why this election too is on top of mind of investors, because not only do you see it or potentially impact markets and economy, but also on the personal individual investor level as well when it comes to realized gains or unrealized gains. That's something too that they have to consider as well and just stay up to date on, most importantly.
Yes. Yep. Agreed. Definitely an important, a lot going on, an important election as well. So now, as we always say, this is not financial advice. This is merely for you to think about, another data source for you to look at when you look at your investments. So we're not recommending anything. If you would like advice, please reach out to me, reach out to Adrian, and we're happy to help. Just as we continue with this general discussion, once again, that's not advice. I've got a few areas that, if Trump wins, if Harris wins, and no matter who wins, what to look at. So, first, if Trump wins, uh, energy stocks are an area to look into. His presidency was marked by deregulation in the sector, particularly for fossil fuels. Next, defense contractors. His emphasis on military spending would be a major benefit for them. Financial services. He was known for rolling back, his previous administration for rolling back financial regulations. Infrastructure. Trump has consistently pushed for infrastructure development. And then pharmaceutical companies, his policies have generally been favorable to that industry. So, Adrian, any thoughts, any surprises or things that are missing from that list that you would have expected if there was a Trump win?
As you pointed out in the very beginning, when it comes to some of these data points, that it could be the opposite. We just never know, and it just has to wait and see how it plays out.
Yes, and actually, as you say that is a great segue to if Harris wins, because it's the first thing on the list is clean energy and electrical vehicles. But as we start at the beginning, showing that the clean energy index, the S&P 500 Global Clean Energy Index, was actually down during the Biden administration. But that's the area where one of the areas where they say if Harris wins, they'd be the beneficiary of. Next, infrastructure and green focus. While both candidates support infrastructure spending, Harris's plan emphasizes green initiatives. Healthcare services. Harris plans to expand the Affordable Health Care Act. It could benefit health insurers and hospital operators. The cannabis industry. Harris has indicated support for decriminalization of marijuana. And then technology with a focus on cybersecurity. Harris has emphasized the need for improved national cybersecurity. Any surprises or things you would add or think need to be removed from the list?
No surprises there, but also I think what people have to consider as well, it's definitely going to also be dependent on the size of the certain companies as well, whether it's a large, medium, or small companies. Some typically are, whatever the environment may be, perform more favorably to others. So that's also too where I feel like a lot of the movement, you could possibly see it more with the larger companies, but again, a lot of the smaller, medium-sized companies too are still really focused more on that battle with inflation, because with rates coming down will definitely help them out a lot more than any type of regulation or changes as well. Because again, some of these larger companies are able to thrive more, not only with better regulation, but this higher interest rate environment that we still are in right now.
Yeah, so rate cuts would definitely be a beneficiary to smaller companies. Which actually, that's the first one I've got in the no matter who wins. Small cap stocks historically rally significantly between election and inauguration day. Uh, there's just thinking about what months those are. There, something called the January effect that usually has greater impact on small cap stocks. Next, big tech. Despite both parties saying they're going to look at big tech, they've tended to do well under any administration. Consumer staples, companies producing essential goods, will do fine in any environment. And then healthcare innovation, typically, or the expectation is that'll strive under any administration. So that's the list of areas you could potentially invest in if you have an inkling which way things will go on election day, and you want to put your money there. But as we started out at the beginning and saying, if you're doing more of a bottom-up approach, looking at individual stocks and individual companies, looking at their businesses, then the election's just something that's going to happen, and your process will likely be unchanged. If you have questions, please reach out to us. As I said, we'd be happy to help. We hope you found this helpful, and we'll be back next week with another great episode. This has been the Retirement Lifestyle Show.
Schedule a conversation with Roshan, Adrian, or Eric today at retirementlifestyleshow.com. Roshan and Eric are certified financial planner practitioners. They, along with Adrian, are investment advisor representatives and serve clients across the U.S. with financial planning and investment advice through Arete Wealth. If you found this show helpful, gained knowledge, or enjoyed the time you spent with us, tell your friends and leave us a 5-star review. This will help others discover the show. To access our show notes, to download any of the tools mentioned in today's podcast, to ask us a question, or to schedule a conversation, go to retirementlifestyleshow.com. All opinions expressed by podcast hosts and guests are solely their own. While based on information they believe is reliable, neither RTA Wealth nor its affiliates warrants its completeness or accuracy, nor do their opinions reflect the opinion of RTA Wealth. This podcast is for general informational purposes only and should not be regarded as specific advice or recommendations for any individual. Before making any decisions, consult a professional. The show hosts offer investment advice through RTA Wealth Advisors, LLC, an SEC-registered investment advisor, and securities through RTA Wealth Management, LLC, member FINRA, SIPC, and NFA. Finally, our music is The Chance by Jason Shaw and Audionautics. It's part of the YouTube audio library, and it's licensed under a Creative Commons license. I am Ray Voices. Thank you for listening.